We are going to start today's session with a conversation with Padmaja Ruparel, a very long time member of the Indian startup ecosystem, co-founder of Indian Angel Network, the oldest angel network in India, and founding partner of the IAN Fund. Padmaja, welcome back to the show.
Thank you.
So let's catch up. Tell us a bit about what's happening in the Indian startup ecosystem from where you sit. What are you observing? What are the trends, and how does that relate with what you are doing in Indian Angel Network? How have your activities evolved? Of course, we have talked many times before, so I'm very familiar with it.
Thank you. I'm delighted to be back. India is growing. It is the fastest growing startup ecosystem, as you know. It is now at the center of the spotlight here, and we just finished one of the largest global startup events that I know of last weekend, which was hosted by the government with a heavy duty participation from the private sector. We had 160,000 registrations, and it was a huge success over 2 days. So we just got out. I just organized that, and I just got out of it. So this is well timed. I think the big thing that's happened here is startups have become at the center point of old industry, traditional industry. So investing in startups is big time. And now it's a part of the venturing has got going. We have, over the last 5 to 6 years, grown the VC industry. We had about less than 150 venture capital funds about 5 years ago. Today we are close to 600. So that's a huge jump. I think today, if you look at some of the listed companies, some of the companies that are listing in India, 60% of them are VCP backed. So equity financing from angels to VCs to private equity is very, very critical for the growth of the Indian economy. The second big piece that we've seen, that the virus of entrepreneurship and the virus of investing both have infected every single industry that I can think of. So we've invested in about 17, 18 sectors now, and we still think there is more to be done.
And
but
when you say
right across,
Padmaja, I have a question on what you just said. By the way, your audio is a bit stop and go, so you're coming to us with a little bit of a delay, so just be aware of that. So the question that I was going to follow up with, as you said, you've invested in 17, 18 sectors. Elaborate on that. Are you talking about making information technology investments in various sectors? Are you talking about various sectors, non-information technology? How are you thinking about what you just said?
Well, one is pure tech, which could be SaaS companies, which could be deep tech companies. Those are, of course, one pure tech companies that we invest in. The other piece is because we as investors want to invest in large scalable propositions, and technology is critical to scale. So therefore, companies which is like in food tech, clean tech, health tech, agri-tech, everywhere we are seeing technology as an enabler. What has happened
so as that's happening, what is the source of the founders, like backgrounds of the founders who are going into these sectors? Are they coming, where is the domain knowledge, where is the technology knowledge? What are you seeing in the mix of the founders?
I think we are seeing a mix in the founders themselves. So we see very, very good technology people, which are CTOs, business people. So that's a big what we were seeing. The second piece is because entrepreneurship has become almost the first choice of career, even engineering graduates who one would have thought are only techies are very quickly acquiring business knowledge. So I think we are seeing a very, very healthy movement towards a mix of tech and business, which is, I think, excellent. And the third, and I think the third piece we are seeing is very deep domain expertise coming. We've invested in a manufacturing company, which is a waterless robotic solar panel cleaner. One would have thought that that's a hardware company, right? Using one of the finest and technology, which allows, by the way, and it's a story you actually hear. When the pandemic hit in India, locked down, and it was the toughest lockdown, this young founding team of single digits, literally 8 years of total experience, they built a ventilator within 95 days from conceptualization to market.
Fantastic. And did they find great adoption quickly, or was that already happening by the time they came to you?
No, they've not only adopted and sold, they've become a strong revenue line, second line of business, while they're also building their solar panel cleaner. So I think that's what we are seeing. We are seeing a very, very fine, honed genetics of entrepreneurship. And that, I think, is excellent for the country and for businesses.
Fabulous. Fabulous, fabulous. This is all very good direction. It's just, it's amazing how the Indian startup ecosystem has changed. I started working on it. Well, I did startups of my own back out of India, product startup out of India back in 1997. So that was way ahead of the curve. But I think I started working on entrepreneurship development vis-a-vis India in 2005. So it's been really fascinating to see how interestingly things have moved in the last 15 years.
That's true.
So how are you, how has your thinking evolved vis-a-vis Indian Angel Network and IAM Fund? What are you looking to do? What are you doing? What are the highlights of your strategy at this point?
So, as you know, IAN was the first Indian investor group in the country. We took 500 investors, and where we started investing from about $30,000, 25 lakhs. With the fund that we have launched about 3 years ago, which invests in companies post-angel round on Series A, what we've actually created is India's single largest horizontal platform for seed and early stage investing. Which means that from 25 lakhs.
Sorry, Padmaja, your audio is a bit tricky. So you were saying that it's the single largest platform for seed and early stage investing, but you also said that the IAN fund is a Series A fund, post-seed fund. So I'm trying to understand which is which and how do each of those play?
So what has happened is between the angel group and the fund, entrepreneurs can today raise from $30,000 to about $7 million on a single platform. So as they start their companies, they can start raising from the angels and keep growing, and then start raising from the fund, which completely reduces their fundraising time. Yet it brings in the huge mentoring and market access and operational guidance from some of the finest successful entrepreneurs in the country. From Infosys or people like a number of companies, who's considered etc. So I think find hands on board come and help young entrepreneurs build their companies, and now enable the fundraising as well.
And what are the highlights of your investments? What are some of the companies that you're particularly excited about?
That's a long question to answer. Actually, long answer. We have 180 companies in our portfolio today. And some of the companies which have done very well is Dhruva. If you know, we invested at about $1 million valuation. It's now sitting in your part of the world, which is...
I know Dhruva very well. We've covered Dhruva extensively. I talk to Jasprit on a regular basis. I also know Naren and Jishnu very, very well. So Dhruva we are very familiar with. What about some of the newer ones?
Yeah, so that is one of our price. So I want to, of course, companies like Logistics. We have some which has raised money from around the world. We've got companies in food tech like Wow Momos, which has raised money again from around the world. We've raised another company which was born in India, invested by us, moved to your part of the world is Unifor, which is a company which has done extremely well again. We have invested in med devices companies like which is a part of the world, and save money from some of the health tech companies. We've also invested recently in a company called Vernacular, which is actually playing on the digitalization model and accessing Tier 4 and rural communities, which is where I say the Bharat market emerging. So there are tons of companies like that. We have WebEngage, which is enabling online. We have Padmaja School of Music, which is providing music education online. They have partnered with Berkeley. So I think there's a huge plethora of companies out there, and we are excited about most of them.
What about exits? Talk about exits both in the Indian context in general and also from your fund context. What are you seeing?
Yeah, exits are not easy. I mean, it's a law of nature that buying is easier than selling, as you know. So exits are not easy. But I think in the Indian context, exits have started happening. Earlier, there were VCs or subsequent round investors who would buy the earlier round investors, but now mergers and acquisitions are happening. We ourselves have got a couple of our portfolio companies acquired by conglomerates like InfoEdge and Wipro, etc. So that has opened up. Companies like Intel and Cisco are very sharply looking at India. And I think with the huge number of funds that have emanated, as I mentioned earlier, there is a lot of opportunity for exit that has now come up for early stage angel investors. As far as IAM is concerned, we have had cash exits for our investors for the last 11 years, every single year for at least 3 companies. And so we've done pretty well there. In fact, our failure rate is very low, which is at about 15 to 18%. Compared to any other fund around the world or angel group, we're probably one of the lowest. Considering I'm the co-chair of Global Business Angel Network, that's where I get a lot of the data. So that's interesting to know. And it has kicked off, therefore, in investors here to invest in startups. And therefore, there's a lot of unlocking of domestic capital, which entrepreneurs should look at. Leveraging.
Padmaja, what is your analysis of what's happening in AI startups in India? How is that trend playing out from where you sit?
No, I think, to be honest, of the deep tech, AI is probably the most common that you will see compared to ML or NLP or something. You will see AI as the most common technology, and it's got a much wider applicability here. But I think what is very, very important for entrepreneurs, as you have entrepreneurs hopefully listening to this, is it really that's the sort of not just an algorithm just working. So I think it's very important for entrepreneurs to understand that investors also understand what AI is and how it operates. So I think that is something that I would like to leave with you on this podcast.
So what you're saying is that when an investor is considering an AI investment, they need to be sure that this AI works. There's a lot of AI out there. Which ones work and which ones don't work? The investor has to sift through that, and that's a tall order. That's what you're saying, yes?
I don't think that's what I'm saying. I'm saying that entrepreneurs need to understand that investors do know how AI works. They figure it out, and if they don't, they'll ask the right people. So entrepreneurs need to come up with good AI propositions and not what we basically say packaged by AI here.
I see. So you see, I see what you're saying. You're saying that people are trying to ride the wave, and they're just saying they're doing AI, and they're not actually doing AI. They're just packaging.
Yeah, and I think that's something which doesn't work because
that doesn't work because investors also understand AI. Good point. Good point. All right, Padmaja, it's great catching up, and your audio is a little tricky today. I would have liked to continue for a bit longer, but let's bring you back with a better audio, okay?
Yeah, sure. Thank you for having me. And
Bye-bye. Take care. We'll keep in touch.
Enjoy the new presidency.